Hello and welcome to Pro Trader Strategies Market Commentary for Monday, July the 6th. I'm Eric Wilkinson, and yes, you very well may recognize me from mainstream media where I've talked about the economic data, the geopolitical environment, how that impacts the overall markets with my market analysis, and I do the same thing in these daily market commentaries, but I'm layering on top of it option strategies I find to implement around those market assumptions that we come up with on any given day. Now check out my webinars on how to really construct these different option strategies, because I have some guidelines that we need to follow in order to implement those. It's not just going out there and buying a call on a bullish assumption. We need to figure out what is going on in and around that underlying before we implement that option strategy. So check out some of those rules there. I also go into a little bit of that here, but more I'm kind of breezing over that because I'm expecting you guys to kind of know what those guidelines are ahead of time. Anyway, moving on with the overall markets. We usually don't get a whole lot of economic data on it being a Monday, but we did get some pretty decent economic data across the pond and here in the United States. So let's get on with it. Great Britain came out with construction PMI coming in at 55.3. Remember, PMI is Purchasing Managers Index. That's anything above 50 shows expansion. Anything below 50 is contraction in the overall economy. We also got retail sales coming out of Europe at 17.8%, expected to be 15%. They did revise last month's number down slightly, but it wasn't really enough to make a difference, as overnight we started seeing some really good strength in the equities, and it's continuing on throughout today. ISM, non-manufacturing, which would mean service sector, and here in the United States, we are more of a service sector company. Yes, we saw the manufacturing sector do very well, above 50, expansion well, but we're more concerned about this service sector part of the economy. It came in at 57.1, expected to be a 50, so right there at no contraction, right there at the watermark, or the, whether or not we're floating or sinking. Well, we're above 50 at 57.1, so that is a good sign. Remember, last month was 45, so a little bit below. Seeing that breakout is nice to see, because I was concerned, be honest, that we were going to see a recession and or depression, even worse, with all of this COVID and the shutdowns. Right now, it's very surprising to see that we got that bit of a pop. A lot of that has to do with the stimulus checks that everybody's been getting, and they're able to spend that money in the economy, creating velocity of money, which, yes, it is putting us into greater debt, but the fact of the matter is we could really be hurting had that not been done. All right, so the overall markets, we've got crude oil just slightly in negative territory, but still in that $50 a mark. Part of this strength in crude oil is not only that we've seen a lot of people out there driving around, some good news over the weekend with the economic data and stuff like that, but we're also seeing a weaker dollar today, which is giving some of these commodities that are dollar correlated a little bit of lift. Even over in the agricultural sector, we're seeing some lift over there in those markets as well. I don't usually talk about those there, but they are seeing a bit of a lift. And you can see here with gold moving higher by about $2.50, just slightly better than that. Last Friday, or Thursday, I should say, we came up against this 1787 and was showing some major resistance. Today, we are peeling above that with that weakness in the dollar. We would expect to think, we're seeing some of these gold and things that moving higher. Well, that would signal maybe that the equities were weak, but that is far from the case at this point. The bonds right now coming off a little bit by about a half a point, but we're right there where we've created that time node, which is acceptance of value, and that's right in line with where I've been talking about. I've talked about a little bit higher, about by 2 points. In that 180 handle is where I think the sweet spot is. We haven't really been able to get above that 50-day simple moving average, and because we've created a volume node here, it's acting a little bit more like a magnet. I do still expect us to stay within this range of these two Fibonacci's, of the 61 and the 78 that I've got lined up here. Actually, this 61 and the 78. But that being said, the 80 handle to me seems like the right spot for it. Haven't been able to get up there and sustain that though recently. VIX, we are moving slightly higher here today on the VIX. We pierced below that 200-day moving average, which I talked about on Thursday, that acted as a nice support. Today, kind of popped below that, but now near the highs in the VIX right now, as I think people are really starting to think that, you know, some of the headlines that we're starting to see here are a little bit frothy. Basically, some of the big names are the ones really driving this market, like Microsoft, Tesla, really blowing the top off of it today, which I'll talk about here, and a lot of these names that are really correlated to the stay-at-home kind of aspect. Tesla not necessarily, but we'll talk about that here in a minute. Nasdaq moving higher by 200 points, making a new all-time intraday high. You can see that the shorts are really waning today, as they're probably looking to run for the hills, as I did in some of my shorts, and we'll getting over to that very shortly. Emini S&P is up 32, but let's take a look at the breakdown of the overnight session. Very bullish, or very net long, I should say. Got a little bit of consolidation, no real attempt to flush those longs out, which is bullish, quite frankly. And we got that good economic data that gave us a push to the all-time highs here these highs here in E-mini S&Ps. That's where we saw the print happen in the Nasdaq as well. But now starting to move a little bit sideways. I don't think we're really going to take an attempt to flush these longs out from the overnight inventory. I think that the sentiment right now is very bullish with a lot of things that are going on in the markets. All right, SPY, I talked about this. We peel above Thursday's high. I was going to be out of that, and I followed through with my word there and decided to dump this trade as soon as the market opened, basically. It was just way too bullish of an environment for me to want to stick around with this trade. And if you guys remember, in SPY, I went into the September and bought the 300 puts in there for $9.91. I puked out of those at $8.81. So out of my SPY on that opening print, basically, I think I was the first trade on that, or very close to it. And then if we move over to Tesla, which I talked about on Thursday as well, I decided to put on some shorts in there because of this gap. I thought that it looked like that the shorts had really puked out. Well, somebody gave a price target of 1,500 for Tesla, and an analyst did, and we've seen the top pop again here, up another 100 points on the day. Now, this gives Tesla a market cap of about $240 billion, you guys. Now, let's put that into perspective. We talked about it on Thursday, that it was now a higher market cap than Toyota. Well, now it's a higher market cap than Toyota and GM put together. Now, let's just put apples to apples here. How many cars does Tesla produce in a year? Less than 500,000. How many cars does Toyota produce a year? Almost a million a month. 10 million a year. Okay, so how is that like just even a thought? I mean, I just, it blows my mind, to be honest. I can't see it. I think it's overdone to the upside, but I talk about this a lot, right? The markets can stay irrational longer than we can stay solvent. So with that being said, I'm going to have to wait for a different opportunity to get in some long puts here. The market seeing a spike in volatility, that helped me out a little bit there to not lose as much as I probably would have otherwise. But having said that, I went into the September and bought the 1,000 puts on the 2nd for $64.45. I dumped out of those at $51.50 today. So, you know, I don't even know what to say about this. I can't believe that a car maker making, 500,000 automobiles a year versus 10 million a year, how the valuation is well over that. I mean, yes, these are futures. They are forward looking, you guys, but how long is it going to take Tesla to ramp up to producing close to 10 million cars a year. Well, one might say, well, their profit margins are a little bit different. They've got autonomous. Yes, they do. They are the front runner in autonomous. That is a very tech-centric, but the fact of the matter is their margins aren't enough to make up for that kind of valuation, to be honest. All right, so that's my thoughts. Obviously that trade was not a winner and was directionally wrong, nor was my S&P, but I needed to add some negative deltas. But with this economic data point on the ISM, that's why I'm cutting my losses on the SPY. Now, with Tesla, it's just a matter of, all right, this is just getting a little out of hand, and I'm not going to ride this out any longer. It broke above my resistance area that I was talking about, or that area of where I was going to pull the ripcord on this trade, and it happened in a day. So I'm out of Tesla. I will look for other opportunities because I do think that Tesla is overdone to the upside. And that's all I have to say about that anyway. Other than that, we do need to talk about one other thing, and that is our disclaimer. Please take a moment to go over this, as we are an educational company and I'm not trying to solicit any of my trades. So just take a moment to go over that. I'm just trying to educate you guys on how trading in real life works out. All right. It doesn't always mean you're going to have a winning trade. I'm not cherry picking trades here. I'm actually giving you guys real life examples of how to go about this on a daily basis. All right. But it's up to you to implement these strategies in your own portfolio, in your own way. Obviously, I'm not always right on my directional assumptions. All right. So that's all I've got to say, other than if you can't take that, take it easy.